for. I'm going to give you now another several things to watch for as we go forward on when we're going to get out of this. One is keep an eye on LIBOR. The good news, it seems to be fine. Second, home prices. This really was a home price thing. And by the way, it wasn't just purchases, it was refinances. It was cash out refinances that caused people to use their home as an ATM machine, which by the way was great for consumer spending because people would buy big screen TVs and automobiles and all the things that aren't selling today off of the equity of their home on appreciation that probably shouldn't have been there. Home prices need to find their level. They need to stabilize. They are continuing to go down. Most experts are saying we have another 12 to 18 months of this, of price declines. You're not seeing it here in Colorado, so you may not be feeling that. But I'll tell you what, I come from California today, and they're feeling it. I was in Los Angeles day before yesterday. No, yesterday. I was in Los Angeles yesterday. And I don't know what day it is anymore. I was in Los Angeles yesterday. In Los Angeles, they said that property values have fallen 45% when most economists were estimating that prices would only fall about 30% from peak to trough. It's already exceeded that. And what they're saying is that they may see another 10 or 15% decline in home prices. So that's a pretty big drop. But the good news is we've got to get there fast. The faster we get there, the sooner things will start to improve. Because remember what I said about the real estate market and the mortgage market. That secondary market, investors buying mortgages, is what makes the world turn in our business. Your money to finance your homes comes from investors buying mortgages from the lender. And we need that to come back. They will come back in as soon as they're convinced that property values have quit declining. So watch for that. Second, we need a solution for Fannie Mae and Freddie Mac. They're in limbo today. They call that conservatorship by the federal government, but it is essentially limbo. There needs to be a solution to what the successor organizations to Fannie and Freddie will be. And Ben Bernanke about 3 weeks ago laid out the range of possibilities. Everything from completely privatized to completely nationalized and everything in between. It is likely you will see a combination. You don't want the innovation of government to run our mortgage markets. On the other hand, you don't want the financial stability of private enterprise backing your mortgage securities. And so you're likely to see some sort of a hybrid come out. That public dialogue is beginning today. As you watch for that, watch for the solutions. When the solution is fit, I could tell you that probably no matter what the solution is, a solution will be a good thing. But I have confidence that the right decisions will come out. I think the right issues are being discussed today. Third, this deleveraging has got to end. We've got asset prices will finally find a bottom, which will stop the deleveraging. As soon as that occurs, you're going to start to see activity come, the economy start to stabilize. I'm guessing we're getting close to that today, but I'm not the expert there. So watch for that, and as you can impress your friends at the very least and say deleveraging needs to finally find its bottom. Delinquencies are still on the rise, and foreclosures are still on the rise. This is not being aided by our current economic situation. They are probably higher than they are higher than they've been since the Depression. So